Hi, everyone. It's a pleasure to be here. My name is Alex Nascimento. I teach blockchain at UCLA, and I have here one of my co-founders of the original UCLA Blockchain Lab, which is now Blockchain at UCLA, another UCLA alumni, Ben Tsai, a great friend, Calvin Ng from Plutus VC, and we're going to have a great panel talking about investments in blockchain and crypto. So with that said, I would like to pass the mic in a virtual form to the two great panelists we have here and let them introduce themselves and tell us a little bit about what they're up to and the companies that they are leading. Ben, why don't you start?
Sure. Yeah. Hi, everyone. My name is Benjamin Tsai. I'm the president and managing partner at Wave Financial here in Los Angeles. We are an asset management, wealth management platform that focuses on blockchain and cryptocurrencies. We have products and services under VC, under crypto, and we also have a whiskey fund, which we've launched last year. So, quite happy to be here and looking forward to talking more about all the things that we do. In terms of my background, I come from traditional finance. I spent 15 years doing finance in Asia, based in Tokyo, Hong Kong, Singapore, and then Taipei. And I used to run structured products across Asia for equity and fixed income for Merrill Lynch. And later on, I ran the commodities business for Merrill Lynch, which at that point was Bank of America Merrill Lynch. I later on took over head of alternative investments for AllianceBernstein across Asia also. And about 5 years ago, I decided to kind of call it a day in Asia and move back to Los Angeles. So, since then, I've been going down the rabbit hole of blockchain and cryptocurrencies, and we started Wave Financial about 2.5 years ago. We currently run about $400 million AUM across our products and services, and I'm happy to get into more details.
Fantastic. Yeah, and Calvin, well, why don't you tell us a little bit about you and what you were doing on the other side of the world?
Okay, my name is Calvin Ng from Plutus VC. We are a 200 million US venture fund, initially investing in the traditional sector of TMT, telecommunication, mobile, and technology, mainly focusing in the Chinese market in the start. And then back in 2016, we moved some parts of our funds to invest into the crypto space. And we have a 200 million dedicated fund just into blockchain and cryptocurrency space. So we have invested in more than 50 over projects, including some of the big names and also the latest projects such as Real DeFi, MantraDAO, Labs, Leprechaun. These are some of the new DeFi projects that we have invested. And we are very, very excited about the cryptocurrency and DeFi space. And we believe this bull run has been very, very good for us. And we hope that this bull run will continue on till end of the year. Okay. And a little bit about myself, from entrepreneur to investor. I've been in the angel investment space for the last 10 years, and as an entrepreneur in China for also 10 years. So I've been in China for the last 20 years. So I've seen the growth of mobile games in China. I started my career in the online games industry by bringing the famous World of Warcraft into China, and then in partnership with the Nine, where in 2004 we listed it on Nasdaq.
Okay. Perfect.
Yeah.
So I'm very excited to have you guys here. Maybe one of the first questions to set up the tone would be, how do you feel that COVID impacted in a negative and positive way? We saw two sides of the equation. The blockchain and crypto world. Maybe you guys could give us your perspective on how this pandemic positively and negatively impacted the crypto and blockchain environment.
I guess I'll start. I think the biggest impact of the various things I can think of is really the fact that due to COVID, a lot of governments around the world are printing a lot of currency to try to support their market. I think it is laying bare the need to have cryptocurrencies from a macro perspective where the governments are not easily able to just print as much as they need. Kind of ethically speaking, I understand why the governments are doing it. They're trying to support a cratering economy due to this pandemic. But the reality is, all of that basically leads towards potential devaluation of currencies. And the devaluation, you may not be able to see it from cross currencies perspective because everybody's printing a lot of money, but you will see it from an inflationary perspective where over the long term inflation will have to set in order to offset the fact that all the governments including the US is printing so much US dollars, for example. And what we're seeing right now is we're starting to see a lot of the asset classes becoming going on bull runs just because of that excess liquidity that's coming into that market. So I'll stop there. I can babble on and on about inflationary issues, but so that's a very macro way of thinking about that.
No, I like it, and I agree with you, Calvin. What are your thoughts? And it's interesting because we have Ben in LA and we have you in Hong Kong.
Yeah, I think inflation is definitely one part of where the money is going to. People need to hedge their money to make it worthwhile. So, but this pandemic, initially when it first started, everybody thought that this would be bad for all economies and so on. But it is proven that it is actually very good for the blockchain and crypto space. In fact, I've seen a lot of my fellows, friends, entrepreneurs, bosses, and so on, their business suffered because of the pandemic. But whoever that is in the crypto space are celebrating every day, right? And this is a fact. From Hong Kong to China to the US, I only see my friends that are in the blockchain and crypto space, yet they're not suffering. They still have that money to spend and so on. So why, before the government starts printing more money to help the economy and so on, what spurred this? Everybody cannot go out. You have extra money in your pocket, right? Every country blocks off, China's blocks off people from leaving, from coming in, and so on. So there is no holidays. Where does your money goes to? Investment. And people have to find alternative investment or alternative business, in countries like Vietnam, which blocks off everyone and so forth. Thailand, see, this is why one of the areas that people look at is the cryptocurrency space.
No, that's a very interesting analysis of where are people putting their share of wallet, and especially with interest rates across the globe at record lows. I think you're right, Colin. Like, people have to find alternative investments, or else you're just losing your money to inflation and banking fees.
Exactly. On this point, I have bankers friends from Switzerland and Germany, right? So to them is the whole entire Europe. You probably have to pay the banks to keep your money. Some of the places, right? And my friend, my co-partner in one of the company that we invested, he showed me a letter coming from France, the biggest bank in France, showing him that, because of your dedication to us, as a long-term customer for 15 years, we are giving you 1.25% per annum. And he's like, what? I make 12.5% per week, probably in DeFi. So this is the huge difference between making money from the DeFi market and making money from your traditional interests. Any staking program today outside in the market offers you a minimum of 8% per annum. That is the minimum base. So how are banks going to compete?
No, that is an interesting question. And I actually have a follow-up question for DeFi and how DeFi models of yield farming and staking are revolutionizing the crypto world. But since Ben mentioned an inflation hedge, a lot of the market now, especially institutional players, are seeing Bitcoin as an inflation hedge. Do you think that that's a trend that it's taking over the institutional side of the financial world? And why is that? Is that like a lack of additional products that would fit that space? Like, why is it happening? Why are institutional players now waking up to crypto? Is it just an inflation hedge, or is it awakening of the innovative solution that crypto brings to our society?
Well, I think from my perspective, which is probably very different from Ben or others, is that finally institutional investors are looking at Bitcoin or mainly as a hedge. But why now? Why not later? It's because the stock market is at an all-time high. Bitcoin is at an all-time high, but because stock market is so regulated, there's only so much you can go up more, right? You can't give a company that has already 50x another 30x or another 10x. You can't do that. See, so let's compare Bitcoin with gold. Gold, you have this long history in gold, whereby you know where is the gold price would be and why. And then if you increase the price of gold, people go mine more gold to bring back down the price again, right? But in Bitcoin, you can't do that.
Can't do that.
Yes, you can't do that. Bitcoin, every day, you can only take X amount out. And I think now there's only that 1 million left of Bitcoin to be mined. And that's 21 million in the whole entire world. That's how much Bitcoin you have in the whole world. So at the end of the day, as an investor like myself and so on, why do I put my money into cryptocurrencies or Bitcoin? You know, Bitcoin, at least I see that there is no ceiling. You can say Bitcoin will go to 100,000, 300,000. If it's 300,000 means you're going to look at another 6x, right? Increase from the price now or the price like a week ago and so on. So if you are looking to make 20-30%, go to the stock market. If you are looking to make 2x or 3x and above, go to cryptocurrency, because there is no ceiling. And as a Wall Street investors, the institutional investors, they know that their power of their money can jack this up, right? They are used to be playing God all the time, even in the traditional finance world. Okay? And this time, if you come into cryptocurrency, well, maybe the law will change, but at this very moment, it's the Wild West, right? There is no law.
I like the idea of the no ceiling very much. What are your thoughts, Ben?
I think that's a very good way of looking at it. I completely agree with the no ceiling discussion. I think it goes back to valuation models and so forth, exactly as Calvin says. We've looked at, I've done presentations comparing gold to Bitcoin and so forth. And it really, the discussion of gold prices being stable really from the fact that people are changing their production schedule to match with increase and decreasing of gold prices. That doesn't actually happen in the whole Bitcoin world. The mining is automated so that the difficulty levels are adjusted so that blocks are produced once every 10 minutes. If somebody solves the puzzle a little bit quicker, as in they have bigger, faster machines, the difficulty increases. If nobody solves it within 10 minutes, it goes over 10 minutes, then the difficulty actually decreases. So the system is designed to naturally leave it at 10 minutes a block, roughly. And, there's a set schedule of how much reward gets paid out on every block. And that is a schedule that doesn't get changed because that's how the system is set up. So it's a beautiful way of doing it. And, and there are other, really compelling reasons to look at gold versus crypto. and Bitcoin, for example. I mean, you can't move $1 billion of gold, across the planet, but you can move $1 billion of Bitcoin across the planet very easily at very low cost. And storage is cheap, movement is cheap, liquidity is there, full transparency in terms of where things are, and so forth. So, and also in terms of a cap size, there is an absolute cap to Bitcoin. It's pretty easy to see. Whereas gold, I think there's kind of not some assurances that there is certainly a certain amount of gold on this planet. There is a discussion of, is the estimate correct or not, and so forth. There's also, can you chemically create gold, artificially, and so forth. So anyway, so there are all sorts of, different discussions there. But all in all, I think, Bitcoin just becomes a much more stable medium. The other thing I would say is that the proliferation of that, of the thought of holding Bitcoin, really also, there are two other components to it. One is kind of the social acceptance of it, and the social acceptance of it is kind of a virtuous circle. More people talk about it and accept it, then more people are willing to consider it, and then more people would think about it and consider it. So it's a positive cycle going up. And I hate to say this, on the way up, it's usually a positive cycle. On the way down, it's usually a negative cycle. So it's just a matter of which side of the cycle you're on, and we're on the positive cycle. The other thing more fundamentally is that a lot of the institutional infrastructure are getting built. Proper custodians are in place. People are licensed. There are a lot more people that do things in a more proper way. For us, we're a licensed asset manager here in California. We're registered investment advisors. I have an SEC license, so does most people in our firm. And we're doing business in a way that high net worth investors are comfortable letting us manage their assets. We manage it in crypto, but they understand that conceptually we have fiduciary duty. We keep our assets on qualified custodians that are also regulated. We're doing all the proper things that traditional finance does, but applied to not the traditional side, applied to really the crypto side. So that's a good balance of things, and that's how we approach our business. So completely agree with Calvin. I think institutional adoption really comes from rarity, comes from better platforms, and so forth. And we're really seeing that platform rolling through. On this tangent, and I'll mention a bit further, we're a client to Fidelity when they were just opening up about 2 years ago, a year and a half, 2 years ago. We're a client to, Coinbase custody even before then. And then we continue to work with major, custodians. For example, we work with Copper, which is a UK based custodian that's licensed, approved by FCA in the UK. And we're also currently speaking with, Standard Chartered Bank. They've opened a custodian called Zodia. And that's announced in the news. So there's not inside information or anything like that, but they're rolling that out institutionally. And Standard Chartered is actually partnering up with Northern Trust. So that's really, some of the big players in the custody space. I mean, if you think, Fidelity is very institutional. I mean, they're more on the asset management side and wealth management side. From an infrastructure perspective, someone like a Northern Trust has actually got more of a reputation on the back end, support system. So in Asia, you hear, Komainu, Inu, which is joint venture between Nomura and Ledger. They've recently done a new round. They're opening up their custody. They're starting to custody a lot of clients. So that's something that that's a counterparty we've been speaking to since their, initial announcement and inception. And very recently, I was on the call with DBS. DBS is fully open for crypto right now. I was shocked at how open they are for crypto. And this is a major bank. This is the biggest bank in Singapore. They do crypto like they do, Singapore dollars or US dollars. And they offer that
leak, right?
Yeah, so there was a leak because they weren't supposed to say it before they got their license. That leak, they had to pull it back. A few weeks later, then they officially announced it. I had a catch up with them, and it was actually very amazing. They are full speed ahead. They're doing it not out of some little division on the side. So Fidelity, just to not taint the rest of their business, taint is not the right word, to affect their rest of the business, they started a separate legal entity called Fidelity Digital Assets. I mean, they own it completely, but it's not part of their main business. DBS is offering crypto off of their FX desk with their FX sales guys. This is a full-on integration. Their private banks offer crypto, and their securities firm, DBS Volkers, will offer crypto also. they're all in. Right now, they're doing institutional investors first and high net worth investors first, accredited investors first, just to get warmed up, make sure their systems work and everything. And I think that's fair. And then they're going to get all into it. They're also opening an exchange and they're setting up an exchange in a more traditional way, which is, I don't know if that's better or worse, but what they're doing is they are opening exchange and they're signing up professional counterparties like securities firms and so forth. And they expect individuals to open securities accounts and then those security accounts attached to the exchanges, which is a more traditional way of setting up that market. Not good or bad, just a different approach, a more traditional finance approach to cryptocurrencies. So I find that super interesting. I find them kind of moving forward really, and that's a benchmark. Now, is OCBC going to step up? Is all the CIMBs of the world, are they going to step up and do more? I don't know. I'm curious, right? Does UOB have a strategy to counter that? And those are all very interesting developments. So looking forward to see more of where that goes. But certainly that institutional adoption, that acceptance that this is a normal thing, people do, is just an amazing thing from my perspective compared to 2-3 years ago when Alex, you and I were working in this space. Everything is like hush hush on the side, and the major guys don't even want to talk to you. That type of thing.
Yeah. At some point we were the crazy guys, right? Now it's all institutionalized. And that's a question that I would like to ask you guys, maybe on a quick fireside answer. So the past 365 days were pretty interesting for crypto, right? We looked at the second Thursday of March 2020, Bitcoin went from like 8,000 to 4,700. And the market cap lost about $30 billion, which was roughly around 40% of the market cap at that time. 1 year later, we're now at Bitcoin at 55, depending on what time you looked at today, 55,000, which is 1,000% up. What would be the single one factor that you would identify as the cause for this immense rally? Like I don't know any other asset that rallied that much this year.
Ben, what's your perspective?
That's a tough one. I don't have a reason why I rallied 1,000%, and I also don't know when it's going to rally another 1,000%. The only thing I can say, from a traditional finance perspective, is it was undervalued at the bottom, and now it's getting more fairly valued. I looked into a lot of analysis on stock to flow in terms of looking at comparing Bitcoin to gold. The stock to flow model was pointing at 55,000 right about now, actually. So we're on track there. And at the next halving, which is in the next 3.5 years, and in 3.5 years is pointing at 400,000. So I'm not saying it's going to get to 400,000 right at the next halving, but it's in that ballpark. We're about 6 months into the new halving, and we're got to 55,000 as the model said. Actually, very impressive, because when the model was written, it was in 4 digits, like at 7,000, 8,000, maybe even less than that when that model was written. At that time,
Which model are you referring to?
There's a stock to flow model people look at, and the guys that wrote it, I think, one of the big proponents was a guy named Plan B on Medium. He published some articles. They're very good articles. I reread them a number of times. Really just looking at it, stock to flow is just about how many years it takes to replace your inventory. For gold, it takes 65 years of production to reproduce what's available right now in reserve. For silver, it's 22. For base metals like copper and stuff, it takes a year or so, because base metal, it's what you consume. You wouldn't put copper away. If you don't need it, you don't mine it. So that's kind of the idea. And using that model, if you went back and did a lot of price fits versus Bitcoin, the fit is amazingly good. And looking at Bitcoin really from a stock to flow model, right now I think it's about 25. At the next halving, it'll be about 65 or so, and at that point it'll be around where gold is. And with that model, it's pointing at $400,000 for Bitcoin, which I say that I'm kind of laughing at saying it because it sounds so far away. But at 5,000, when he was talking about 55,000, people are like, what are you talking about, right? You're talking about an 11x in this asset. Well, we traded 55,000 by yesterday, right? So, 11x happened over the 2 years, and it happened around the timing that he said would happen. So I'm quite impressed. And, I'm saying, 400,000 is within the realm of reality. Now, that's kind of where the models show, and I'm actually comfortable with that. I come from a commodities background. I used to run commodities, and I do believe that that's a good way of looking at it.
I like it. Calvin, what do you think on your more venturous side of the world?
There's just so many models out there,
Sure.
so many models, so many predictions, and so on. Surely one of them will hit, right?
Yes.
You just have to take YouTube KOLs as a good example. One would say, oh, it's going to drop. The other one say, oh, it's going to moon, tomorrow. So it's a 50-50 chance, right? You
Sure.
hit it right, you got to push your video all the way. See, I'm the oracle, listens to me, right? And if you guess it right, delete the video.
Yeah.
So if you really ask me, I was following this and so on. It all started with manipulation, right? So I hate to say this, but there is a lot of manipulation over the years of the price of Bitcoin. There's people who can whales, miners, mining companies who can actually make Bitcoin move 15 to 20% overnight. Okay, these are all coordinated move, and coordinated move is nothing new in the pump and dump market of crypto, right? So it all started with manipulation, but I strongly believe that no one had predicted that Bitcoin price is what it is today. Okay, until the institutional investors comes in, this grayscale helped a lot with the hype, and then micro strategies start seeing this, and then Elon Musk, whoa, Bitcoin, Dogecoin, right? So you add is why is Bitcoin the price it is today? I think it's a mixture of every little tiny bits, and including huge hype, right? Okay, so if you really ask me, institutional investors, it's just the last 6 months, or the last 3-4 months that has hyped this up, and now every single where from Hong Kong to US, everyone is trying to form an ETF fund, right? And this will further push this market upwards, because once you have new ETF funds, you hire new salespeople, and when you have new salespeople, you bring in new customers, new investors that puts their money into cryptocurrencies, right? So this is where the market is heading. So it's a little bit this, that, and that adding up together that rally it up to today's price. There is no one factor.
I think you brought up a really good point there. I think what we're seeing is actually new money coming in the past 3 months, in terms of not only the institutional investors, but the retail investors who have been sitting on the sideline, that have been looking at potentially, institutional investors coming in, kind of the fanboys of, Elon Musk's fanboys, and, MicroStrategy's fanboys and so forth, really kind of additional capital coming in that we're not in. I mean, my cousin messages me. He's a medical specialist working in an ER. He's like, "What's up with Bitcoin?" I was like, "Okay, now every random person."
Can I buy now, Ben?
Yeah,
can I buy now?
Yeah, exactly, right. So and he went and bought some, and same with a lot of people who were not, previously interested. So that new money is actually good, because I think it brings more capital into, the ecosystem. That's the only way the ecosystem can go up, right? If everybody's just trading with each other, then you have some plus minuses, but the total pool doesn't really increase that much. But with the new people coming in, it's very good. at the same time, I would say that there's still a lot of people who still don't have very much right now. I mean, I wish I had more also. So there's still plenty of upside from that perspective. I'm like, wow, when should I buy some more, right? So,
that's the $1 million question that I'm gonna ask you. At this price today, are you gonna buy 10 more Bitcoin or 100 more Bitcoin?
So that's a tricky one. I don't really have a good answer, and so obviously, the right advice is always buy on dips. So
I've been trying to find the dip since 17,000.
Yeah. So no, that is the problem, right, Alex? I think you nailed it on the head,
for it to drop to 17.
Yeah, exactly, right. So I think it's just tough. I've had many limit orders I've left on the exchange that didn't get executed. They're just there, They're still there, but it's just buy orders.
You can cancel it already.
Yeah, I think I should cancel it. They're not going to get there ever. Yeah.
So Ben mentioned something, one single sentence like trading between each other. Now, I like to bring this up because in 2019, okay, this is actually the case. There is the increase of number of users in the crypto space, okay, is below the number of people leaving the crypto space in 2019.
Yeah.
People in like countries like Malaysia, which are burned terribly, they totally tells me that, in 2017, when I tell people, what do you do? I'm a venture capital company that invests into cryptocurrencies. Oh, you are God. And then in 2019, what do you do? I went home. I'm a Malaysian. I went home and I said, well, I'm involved in the blockchain and cryptocurrency business. And all my aunties is like, why do you do this kind of scams?
Yes.
So 2019, where the people drop off more than the increase of users in the crypto space, basically what Ben just now said describes 2019, is the believers are trading among themselves. I'm selling some to you, and when the price goes back up, you sell back some to me, and we are just maintaining the whole industry. And these are the people during this bull run that became super rich. I know a guy in Hong Kong that now has, that day he was telling me 380 million US he made, and he's going to retire next year.
Good for him. Good for him.
And he's one of the guys that during 2018, when Bitcoin went to all-time low and so on, he didn't sell a single coin. He just held on to it. It's the kind of belief, Well, 2018, I dumped all my coins. To be frank, otherwise I won't be in this panel, Sure. I'll be sipping martini and telling, next change, and don't talk about the panel.
Come hang out on my super yacht. Yeah. No, I agree with you guys, and we've all been in the space and saw the lows and highs, and at some point we were questioning ourselves as if this was sustainable in 2018 and 2019, and Ben and I saw a lot of our peers leave the space, especially in the US, and I'm happy we stayed. But as we get to the end of this great discussion here, I wanted to ask you guys more about what you were doing in your company, in your funds. Ben has some incredible alternative assets and tokenization of assets that are very interesting. And Calvin, you've been deep in the DeFi space. Maybe you could talk us a little bit about this. DeFi, for those who are not familiar, is the new frontier in crypto. So maybe Ben, why don't we start with you? And the topic of the question is, what have you been doing, and what excites you for this upcoming year?
Sure. I think, as going back to what Calvin was saying, I mean, we started our firm at the end of 2018. So we went through a pretty tough period. And at the same time, I think it's really good for us because we became a lot more disciplined and we're a lot more focused. with that said, we obviously didn't buy enough, otherwise we'd be retired. So I agree with Calvin on that one. So
Ben, we can't retire. You know why? Because we only earn the carry, right?
that's right. That's right. That's right.
It's
So
our LPs that can retire.
that's right. Our LPs can retire. Yeah, exactly. So, in terms of interesting things, I think going through kind of a relatively negative cycle, we went through really thinking about focusing a little bit away from pure crypto and looking at really blockchain applications. We had some specialties in terms of tokenization and securitization. I've always been a licensed guy in all the different countries I'm in, so I was very familiar with that. We were consultants to Tezos, we were consultants to a number of protocols on that. So we thought we'd actually kind of, as they say, eat our own dog food and get into tokenization. So we looked at various different assets. We looked at real estate. We looked at clean water. We looked at a rainforest for carbon credits. We looked at Japanese racehorses. And in the end, we decided we wanted to tokenize American whiskey. American whiskey had the greatest return profile from a more traditional finance perspective. I think all the crypto guys don't find it interesting enough from a return perspective, but for traditional investments, it's a very attractive return and very safe, just because all we're doing is leaving the whiskey there for it to age. So from it's hard for me to mess it up. I think it's probably the best way to say that. So so we started a whiskey aging fund. It's basically a private equity fund. We're taking clients' money, we're buying whiskey, and we're aging it. One interesting aspect we added to it is we're tokenizing the ownership. So the whiskey tokens become tradable. And I think that makes it a little more interesting, because we're providing, pardon the pun, we're providing liquidity to a product that normally doesn't have liquidity. So that's something I've been excited and working on, and people like talking about whiskey. And I think that's a great thing. I was telling Alex before this gathering that at the beginning of last year, when I talked about crypto and whiskey, everybody wanted to talk about whiskey. And at the end of last year, when I wanted to talk about whiskey, people say, "Oh, so what's going on in crypto? Tell me all about Bitcoin," and so forth. So certainly a change of mentality and a change of interest. And overall, it's very interesting. We obviously also provide crypto exposure and so forth. So as a firm, we're quite excited, and these are all the things that we're working on.
Interesting. Calvin, what about you? What you've been doing? What excites you?
Ben, whiskey tokenization, that's securities, right?
Yeah. Yeah. We're going down the security token route. We're not really doing the NFT route. With that said, I look at the NFT route and I find I find it very interesting. It's just, it doesn't have the security element to it. So attaching it to hard assets, I was a little bit concerned. So we decided to go security token route. We're doing whiskey and, proper Reg D, Reg S offering out of the US. We went to a very high end, whiskey maker. They're making whiskey on our behalf. It's sitting on the shelf. We right now own 2,500 barrels. That barrel on the wall, that's one of our whiskeys, actually. I took a picture and put it on the wall. And, so we own basically
so much that you put it in your room.
Oh, that's right. That's right. This is my home office. I'm by whiskey on the wall. So yeah, we own about 500,000 bottles of whiskey if you convert it to bottles. So, it's interesting. I think it's starting to pick up interest actually in different parts of Asia. I think up to now, everybody drinks Scottish whiskey. They drink Japanese whiskey. Japanese whiskey was very hot for 10 years, and now there's no Japanese whiskey left. Now it's all the big brands is kind of sold out. People are killing for it. I've got a few bottles at home, and people are all fighting over that. So it's really a matter of kind of moving on to what else are people drinking. I'm starting to see bourbon bars, American whiskey catching on in the US, in Asia. And actually, I think because of the tradition of drinking a lot of Scotch, they like, drinkers like whiskey with a good aroma profile. So not necessarily like a wheated bourbon whiskey, but more of like a rye whiskey or a rye bourbon whiskey could be very popular in Asia. So that's why our inventory is slightly skewed that way. And we're kind of hoping for a boom in Asia for that. So anyway.
You do know a lot about whiskey for sure. Right.
Sure.
My side, what do you look at? Actually, 1 year plus ago, back in early 2020s, we were deciding among ourselves what is the next big thing. The pandemic is hear places may be locked down, the virus may spread. Where shall we put our focus on? So we decided back then that we think that in blockchain or in cryptocurrency, we ask ourselves the single most important question. Number one question, where is the use case will come from? Okay. Number two, we ask ourselves, which is the most important question, is where's the money? Because in every business, the key thing to us as VC investors or even entrepreneurs, we have to ask ourselves, where's the market and where's the money? Is this market is where the money is? So back then we decided that DeFi was the thing that can. We never did predicted that DeFi would boom last 2020 May, June, July. See, but we thought that this is the direction where the use case would be. Okay, there's going to be a lot of use case: lending, savings, borrowing, interest rates. You know, something like unbank the people, and also the alternative banking and so forth, right? So we thought that this would be the use case, and this would provide where the money would be, real money in crypto, not air money and so on. Well, DeFi is lots of air money.
Yeah, I was just gonna say, but anyway, yes.
Well, as long as you believe in it, the air money becomes real money, right?
Sure.
It's all about the belief, right? So we hit on the right spot
definitely
in January 2020, and DeFi came in May, June, July, August, boom. So two of our projects, if you look back into the history of fundraise, or you look at fundraise is the best mark, okay, pinpoint the mark to show who has raised how much in the market, and that you're really doing something and not just a website and some announcements. Okay, so back then, if you look at MantraDAO, that was the first project, DeFi project that we invested in staking. The business model is staking, and then it became a boom. You know, over I think less than a month, everything was raised, and people keep chasing us. You know, oh, can I get more tokens? And then the next project, 30 days after that, was Real DeFi, which raised 20 million US. Okay, and it's all on the DeFi space. So back then we predicted DeFi. So, but then do we continue to predict what is the next trend? Now, as a veteran investor, VC, usually we don't do that, because predicting can be wrong, and then you make the wrong bet into the wrong industry. We are already lucky that we bet the right industry back in January 2020, right? MantraDAO and Real DeFi were the first one, and then now we have a host of stuff coming up. We don't predict, but we go where the wave rides. This is how venture capital companies works. Okay, we saw on the Richter scale, the tsunami is coming. Okay, we jump on it and jump on the tsunami, right? We jump on the wave itself. So this way, nothing goes wrong. Okay, we as GPs and partners of a fund, we will always make money for our LPs. So we always jump on the wave. So what is the wave today? NFT. Okay, so we are big on NFT. We invest into NFT. That's how VCs work. But if you really want to ask, so do we just put 100% of our money on this kind of wave trends? What is hot today? Well, we do allocate 20% to 25% into what we believe is the future. What is 2022? Or starting 2021 will be something hot, and that is security tokens. We believe that finally STO is finally coming. So we started to put money into this STO space. And that's where just before we started recording, I was telling you that yesterday one of the company that we invested, Labs Group.io, which is tokenizing of properties,
Yeah.
right? Just raised fully all their money in 30 days. And yesterday, their NFT sold more than 2 million US. Okay, so this is where we are moving towards, and Labs is in the space to tokenize resorts. The founders are pretty popular guys in the crypto space and also the traditional property space. So this is where we're looking at.
I like it. Security tokens have been my flagship for many years. So if you're gonna hit 3 waves in a row, I'm gonna be happy.
Well, there's in Hong Kong, it's called a Mark T, right? You can predict which horse comes out first 3 times in a row.
3 times in a row. That's a charm.
Yeah.
Yeah. So with that, I would like to thank you guys very much. I really appreciate you taking the time to participate. I really look forward to seeing both of you in person as soon as this pandemic ends or eases. And would also like to thank all the team from Next Change Hong Kong for putting this together and continue delivering great content. Although we've all been separated, this helps us keep in touch and keep the community tight.
Great. Thank you very much. Thank you for having us.
Thank you. Thanks, Next Change.